So over the past couple of months, there have been talks about a bear market, all right? And with a bear market, we're seeing weakness in many of the stocks in the US market, even in the Singapore market, right? So in this video, we'll be looking at the top bearish, all right, candlestick patterns to actually profit in a bear market. That means to actually make money in a bear market as prices were to push even lower. You can actually profit from the downside, but only if we want to spot some of those bearish candlestick patterns, right? So make sure you watch this video all the way to the end if you don't know how you can use candlestick patterns, right? In this case, bearish candlestick patterns to actually profit in a bear market. Hey guys, Joey here, top tier MyZero trader in Philip Securities. And yes, this is the video right here for beginners, right? So if you are new, I bet you'll be able to follow. Alright, so make sure you watch this video all the way to the end to understand how to profit in a bear market. Right, so let me just show you what will be discovered in this very video, right? So what is a bear market? Very quickly, let's talk about it. And what do we want to look out for in a bear market? How do we know whether it has turned into a bear market? And what are some of the stocks that we can actually look at in a bear market? Like, has it turned to a downtrending stock? I mean, from like a bull market to a bear market, what happens is most of the time, you'll see the stocks turn from an uptrend to a downtrend, right? And that's where we can think about riding the downside in a downtrend. So we just cover very briefly on what is a trend, how do we tell whether it's a downtrend, all right? And of course, we look at candlesticks, how do we use it to trade stocks, the basics of candlesticks, and we look at some of the bearish candlestick patterns as well that you can use, all right? And where do you want to find these bearish candlestick patterns, right? So it's not just anywhere randomly in the chart, right? You want to find it at the right places, at the right areas of value, we call it, and that's where we could potentially see more downside, or if you take like a short position, you can ride the weakness even more. All right, so yeah, where are the areas of value you can find these candlestick patterns? And of course, we look at some real life case studies as well as to where to actually find these candlestick patterns. All right, so are you ready? All right, so make sure you hit the subscribe button. Of course, give me a like as well. You will definitely help out the channel, and thank you so much for doing this, right? So subscribe right now to the YouTube channel. Thank you so much. So firstly, what is a bear market, right? So very simple, a bear market just means that it has kind of like fallen by 20% or more from its peak. So this is the S&P 500, and you can see that this was a peak we have hit somewhere in like January of the year, all right? And become like sold off by about like 22, as long as like more than 20%, then it will be what we call a bear market territory, right? So many of those stocks are showing signs like this, whereby it has fallen by more than 20%, maybe sometimes 30, 40, 50%, right? So when that happens, that's where there are some signs of a bear market actually forming, all right? And of course, looking at the trend, what happens is in a bear market, most of the stocks will turn from an upwards direction, uptrend, to a downtrend. So how do we tell whether it's like a downtrend? Very simple. You can look at what we call the moving averages. So this is like the 100 days moving average line, the red line, all right, kind of like crossing down below the blue line. The blue line is what we call the 200 days moving average. So as we see, this 100 days moving average line pointing lower, all right, kind of like cross down, and it kind of like push lower with the blue line pointing down as well. That's what we call a bit of a downtrend, the mid to long term. That's where you want to be careful, right? So that's the first sign of weakness in terms of a bear market forming. We can see the moving averages all starting to turn down and prices below it, all right? And the next thing would be, we can also look at what we call the prices, all right? It doesn't just go down every single day. It might hit a certain level. You might see a bit of a rebound, because there could be like a technical rebound. People want to do some bargain hunting and all that. But as it rebounds up, sellers comes back and push prices down. So that's what we call lower high. So you can see right here, this is like the high we have formed. This was the high. This was the high. Another high here, another high here. So as we move forward, right, in time, you can see that we form what we call lower highs, right? So these are all signs of a bear market, or like a downtrend actually forming. When we form like lower high, that means buyers are coming back to push prices back up, but it doesn't really go back up to that previous high, somewhere at the midway mark, and sellers comes back and they start to push it down and maybe even lower. All right, so that's how we can tell that the trend has turned down, all right? And that's what we'll see in the bear market, whereby we see a downtrending stock. That's why we can think about taking like short positions to actually ride the weakness. So I pretty much covered very briefly on what is a bear market, and what is the trend you are seeing in a bear market, right? So it's pretty much in a downtrend. All right, so let's take a look at candlesticks, and of course we look at the bearish candlestick patterns that we can spot in a downtrending bear market, right? So very quickly, just let me cover what is like a candlestick for those of you who are new, all right, to all this. Basically, a candlestick bar, we can look at like a day, all right? So a day, there'll be like what we call an opening price, a closing price, a high of the day, and the low of the day. So we have a green bar right here. It just shows that it kind of like opens lower and close higher, all right? So this black line, this vertical line is what we call the shadow, all right? So this is like the high of the day, and this is like the low of the day, all right? So a green bar just means it opens lower and close higher, all right? That's it, right? So every single day when the market opens, when the stocks trades, there will be what we call a candlestick bar, as long as there's an opening price, a closing price, the high and the low of the day, all right? So one day we have one bar, 2 days we have 2 bars. Very simple, all right? And a red bar is when it's the opposite in terms of the opening and closing price. That's it, right? So opens higher and it kind of like close lower, right? So that's the difference between the red and green bar. Nothing complicated. It's just one of it opens higher and close lower. So definitely a red bar would be a little bit more bearish because it opens higher and sellers kind of like push it down, 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 and close somewhere at the low of the day. So it's a bit more bearish, I would say, right? So this is just what we call a candlestick bar, right? So we need kind of like a few candlestick bar to see something, all right? So let's take a look at what we spot in terms of the bearish candlestick patterns. All right, so let's take a look at some of those bearish candlestick bar. So what is a bearish candlestick bar? So as I say, a red bar is nothing more bearish because it opens higher and closes lower. Right, but there are some bars which are more bearish, right? Even though it's red in color. So you can see both of them are red in color. This is what we call a bearish Marubozu bar. All right, you can see right here. So on the right bar, this is the standard bar whereby it opens high, close low. There's like an upper shadow. There's a lower shadow. All right, that means it kind of like went to a high and went to a low of a day. All right, but for this bar here, right on the left, you can see that there isn't any like upper shadow or lower shadow. There's no like black line and there's no line at the bottom as well. Does it make sense? All right, so this shows that sellers were pretty much in control from the beginning of the day all the way to the end of the day. That means it opens higher. It didn't even like manage to go up a little bit more, right? It opens here, and sellers came back and just push it down, 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 all the way, and it closes right at the day low, right at the day low right here. So it doesn't even like went down a little bit and buyers came back up and push it back up like what we see over here, right? This day you can see that it kind of went down a little bit more, and at the end of the day, buyers came up to just push prices up a little bit and close somewhere a little bit at the high. But in this case, for this bearish Marubozu, it kind of like closes right at the low, right? It didn't even give buyers a chance to just push prices up a little bit. So when we see these at the right places, it can be a bit more bearish, I would say. This is what we call a bearish Marubozu bar. All right, and the next one would be what we call a shooting star, right? Shooting star. So what is a shooting star? So basically, when we look at candlestick bars with higher or long upper shadow, that means look at this right here. Red bar, same thing, it opens high and close lower, opens high, close low. But what happens is in the middle of the day or maybe in the morning of the day, right, you can see that it opens higher here and it actually went up, and this is the high of the day, right? So it was actually like a green bar if you look at it in the morning, maybe like 10 a.m. or 9:30 a.m. when the market opened. It was actually a green bar. That means it opens here and it went up. It was actually like a green bar. But what happens was sellers came back to push prices down, down, down. So it went all the way down and passed down the opening price and went even lower and kind of like close lower. Right, so when we see this bar, this shooting star, right, especially a bar with what we call a long upper shadow, that's where you want to be careful because it shows that sellers are pretty much in control, right? Buyers kind of like want in the morning, in the afternoon, but at the end of the day, sellers came back, they regained control, they started selling and started to push prices down, down, down. All right, and that's where we got a long upper shadow and like there's a red bar right here. I mean, it could be a green bar, a red bar, doesn't matter, but when we see like a long upper shadow, it just shows that pretty much the high of the day was all the way up above, and sellers came back and pushed prices all the way back down and regain their ground, and it kind of like close somewhere at the lower as well, right? So this is what we call like a bearish shooting star. All right, so let's take a look at a bearish candlestick pattern as well, whereby there are like 2 candlestick bars. So this is like a bearish engulfing pattern as well. You can see that this is like the first day, and on the second day, same thing, we got a red bearish bar, and it completely engulfs the first day bar. That means it opens, you can see right here at the top, right, opens higher, even above the high of the previous day. Initially went a little bit higher, but sellers came back and pushed it all the way down, 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 and it closes right at the lower end, even lower than the previous day low. Does it make sense? So it can like completely engulfs or covers the entire fourth day bar. So that's what we call a bearish engulfing pattern, especially if you see it right at the right zones, right? What we call like a resistance, and of course in a bear market, in a downtrend, we look at some case studies later. That's where you want to be careful. We might potentially see some weakness or prices kind of like pushing away from that resistance level. Alright, next would be what we call a shooting star pattern. So now this is the same shooting star that I talked about, but now of course we put a few bars to kind of put it in perspective. So we see it right at the top at what we call a resistance level. Same thing, it kind of like push up, and then we see this shooting star right at the top at the resistance. That's where we could potentially see a retracement back down. We do break some of those like near-term support levels like what we see over here. Right, so this is like kind of like a bearish candlestick pattern that you want to focus on, especially in a downtrend. In the bear market, that's where if you see it at the right places, you want to be careful if you're holding on to it, because we might see weakness coming back again. Alright, so let's go on to where do we want to spot this bearish candlestick bar or bearish candlestick patterns, right? So we want to spot it at the right places. Of course, first of all, we want to look at the trend, right? So in a bear market, most of the time, the stock will be in what we call a downtrend. So we covered very briefly what is a downtrend. We look at the moving averages, whereby, you know, the 100 days moving average have turned down and crossed below the 200 days moving average. And we also look at what we call prices kind of like swinging up and down, forming what we call lower highs. So lower highs, not a good thing. That's pretty much a downtrend encounter, right? So as it moves down, right, it doesn't just go down every single time. Most of the time, we'll like consolidate, and we will have what we call a support and resistance, whereby, you know, buyers might want to bargain hard. It might rebound a little bit, go to a certain level, and that's where, you know, that's where we could potentially see like a bearish candlestick bar. So this is where we're going to spot it right here. This is what we call the resistance zone. So each time it touches or nears that level, all right, sellers are out to push prices back down, especially in a bear market, especially in a downtrending stock. All right, so that's the area, right? A resistance level, there's a horizontal line, all right, there's a zone whereby selling can actually come back. And if we do spot many of those bearish candlestick bars or patterns that I talk about, the bearish Marubozu, maybe even the bearish shooting star or the bearish engulfing pattern right there in this zone, that's where you want to be careful, because we might potentially see a retracement back down. All right, if the trend is indeed down, and if the trend were to continue down and down, even lower and lower. All right, so this is pretty much where you want to spot this bearish candlestick patterns in a bear market or in a downtrend. Okay, so let's take a look at some case studies and see whether can we spot any of those bearish candlestick bar or bearish candlestick pattern, right? So this is Spotify, one of those US stocks which was trending up quite good in 2021, 2020, all right, kind of like hit a peak somewhere around here. All right, and we spotted a couple of like bearish bar. Look at this right here. This is like a bearish bar. You can see, as I mentioned, anything like a long upper shadow, whether it's green or red doesn't really matter, but if we see like a long upper shadow, it just shows that prices push up at the morning, all right, and sellers came back and pushed prices all the way down. So the longer the upper shadow, the more bearish it is. So it's all this, you know, upper shadow right here, all right, somewhere around that 360 mark, and then another, look at this, right, another bar with what we call an upper shadow as well as a red bar. So two bars right here, 360 to 380 mark. So that could be like a resistance level, whereby we saw this bearish candlestick bar with long upper shadow, which shows that sellers are pretty much defending this level from 360 to 380. Then, all right, sellers actually coming back. So you can actually draw what we call a resistance line right here, like what I've done, all right, maybe around 370 to 360 at a point in time. So of course, at this point in time, we couldn't really tell that the bear market has happened, or like just turned from an uptrend to a downtrend, because you can see at this point in time right here, we were pretty much just consolidating, all right, from this range from like 300 to about 360 up and down. Let me just draw it for you. You can see with it moving up, swing down, swing up. We got the bearish candle, came down, swing up, bearish candle, came back down. Okay, so it's pretty much consolidating in this 300 to 360 range. And at point in time, it was like somewhere around February, I would say March 2021, all right. And you know, the uptrend was still pretty much intact, right, in terms of the longer term trend, because we are still forming what we call higher lows, right. So this is like a low, all right, the low, all right, and the low right over here. So it forms what we call higher lows, all right. So it's pretty much in an uptrend, all right. But if we were to break certain support level like this psychological 300 level, look at this right here. So when we broke this like 300 psychological level here, that's where there are some signs of weakness already, because the trend has pretty much started to turn in terms of the short term. Because this is a bit of a mid to long term trend, but as we broke this 300, there could be some signs of weakness in the short term, whereby the trend could potentially turn down, right? So this 300 level, all right? So as I said, we don't look at support and resistance level. So if we see like a bearish candlestick bar near like that resistance level, you want to be careful, all right? But if we break certain support levels, so this 300, as I mentioned, was this support level whereby, oh, look at this right here. Instead, I think we kind of like spotted another bearish candlestick bar here as well. This is something like a shooting star, remember, a long upper shadow, right? This is something like a bearish engulfing pattern, right? Not really a bearish engulfing, but yeah, I could see a long red bar, all right, right at resistance about 300, so psychological level as well, all right? That's where we are seeing resistance. Another bar right here, so look at this, right? So this is something like a bit of a shooting star, a bit of a doji, but we have a long upper shadow right at the resistance, right? So as long as we see that, potentially you can see that we started to retrace down, right? So as we see many of those bearish candlestick bar at the resistance level, we could potentially retrace back down. Alright, so we can like digress a little bit, but maybe just get back to this level. You can see that this is like the 300 level, right? The 300 support level that we've been holding from December 2020 to about March 2021, about 2 to 3 months, and then we broke this. So there are some signs of weakness. So this support, all right, at 300 would now turn to be like a resistance level. So let me turn this to red in color. So we might actually break a support and it might push down, buyers might come back up and it might start to retrace. So this support would turn to be like a resistance level. So we do see like, in this range. Let me just draw it for you. For example, we do see this range as you can see that as we kind of like traded lower, we kind of rebounded up as well. So we do see in terms of this prices heading back to this new resistance level in this zone that I talk about, right? It's kind of like rebounds to hit to this level, and we see like a shooting star, a bearish Marubozu, or like a bearish engulfing. I think this one we spotted. Let me just draw it for you. I think we spotted another one right here. You can see this is something like a spinning top, right? Yeah, it's kind of like a signal, a bit of an indecision, especially at the resistance level. You could potentially see a bit of a reversal as well. I think this is another one right here, kind of like a bearish bar. Okay, and a couple of bearish bar right here. Not really like a shooting star, but you can see that we did hit to that level, and a few bearish bar came out right at the resistance level, and prices started to push down, right? Started to push down, right? So this, it kind of like confirms that this 300 level at a point in time, this 300 was like a support turn resistance, and as long as we stay below 300, that's where we are pretty much weak, right? We are pretty much weak. Of course, the trend might actually turn down. All right, so let me just remove this this line. You can see that in terms of the moving averages, right, we started to turn down as well. Look at this right here. As I mentioned, the 100 days moving average, the red line was pretty much up and above the blue line. So when it comes like crossed down below the blue line, definitely there are some signs of the trend turning down. So somewhere around like June 2021, that's where we spotted like some signs of the trend turning down, and pretty much in a downtrend, it might actually hit lower. So that's why you want to be careful, especially if you see many of those like bearish candlestick bar. But right over here, you can see that that's where there are some signs of the trend actually turning down. All right. Oh yeah. So let's take a look. So yeah, you can see right here there is another bar, right? So this is like another bearish bar. You can see. Let's see if you can spot something here. This is something like a shooting star right at this $300 mark. You can see that it kind of like it kind of like went up over here, went all the way up to about 305, 306, but sellers came down and pushed prices down, and kind of like closes below the $300 mark, right? So yeah, right at this level that I talk about, right, this is that resistance level in a downtrend. So by then, right over here, you can see that the trend is pretty much turned down. So when we see this over here in the resistance level, some bearish candlestick bar, downtrend, that's where you want to be careful, because we can potentially see a retracement back down. And that's exactly what we saw when we saw this shooting star, right? You can see when we saw the shooting star, so they consolidate a bit, and then we started to sell all the way down, all right, rebounded, and then we broke another support level around that 210 to 220 level. I think that was where we saw a little bit of support here, rebounded 210, rebounded, and we broke the 210 level as well and started to push down, right? So when we break a support level as well in a downtrend, that's where we could potentially hit lower. Okay, so as it breaks a support level, right, it will not just go down every single day, right? It will just go down, and then we might find a little bit of support, and it can actually stage what we call a technical rebound back to that resistance level, like what we saw here, right? So it was a support level at 300. We broke it. You can see we went down, and we started to see this consolidation for like about 10 months, right, from about 210 to 300 as we touch it a couple of times here, a couple of bearish candles, and we headed down. All right, so this is what can happen in the downtrend. So in a bear market, right, if you see this bearish candlestick bar. That's where you can take like short positions in this sell zones, right, to ride the downside. Of course, with a stop loss as well, in case it were to break upwards, you want to have a stop loss to buy back, to cover back your short position as well. All right, so let's take a look, right? So this is Spotify. So let's just dive deeper. You can see that yeah, we kind of broke this 200 and 210 support, and okay, look at this. As I mentioned, right, we kind of like sold off. So let me just go ahead to remove this and this. All right, and you can see we kind of broke this support level, and we went down. All right, started to stage a rebound up. All right, and started to hit down again. So this support, right, so this support has turned to like a resistance level again, right? So we have this zone that came out, right, and when we broke the support, you can see this is like a zone. All right, so if we like kind of rebound and we hit to this zone, this red rectangular area right here, whereby that same bearish candlestick bar, you know, the shooting star, that bearish engulfing pattern would come out. That's where we want to be careful. That's where sellers can actually come back and where you can take short positions. So in this case, you can see that this is something like a bearish bar, not really like a shooting star. I would say slightly like a bearish engulfing. You can see it opens somewhere at a high, it closes right at a low, completely engulfing the first day bar. So something like a bearish engulfing pattern. And the fact is that it happens right at this resistance level. It was originally the support. All right, so 210 was the support level, and we broke down, and it's now the resistance. So when we see this bearish bar right here just below the 210, it shows that hey, this resistance is pretty much a new resistance, right? The support has turned resistance, and we, you know, that's where we can still see selling as long as we stay below that 210 level, because that would be the new support turn resistance. Does it make sense? All right, so it started to push lower. All right, and yeah, so pretty much went down. I think we kind of broke like the 160 support level again. All right, so in a downtrend, we can break a certain support level, we break it, went down, and then of course we got this zone again right here, right? That would be like another zone. In fact, we can actually just like shift this down. All right, so this zone has like shifted lower here. All right, and that would be like another selling zone, whereby the support again has turned resistance and would now be like 160. Right, and of course same thing if we see those bearish shooting star and all that right there. And I think there's one little bearish bar right here as well, another bearish bar basically in this sell zone. Right, and that's where selling can actually come back and push prices down again. Alright, so yeah, I think this is where we are right now. So we kind of like broke another support level. Let me just draw it for you. I think this was like the support about 120 right here. So this, let me just change this to red in color. Alright, and of course you can see we broke this 120 support level. So of course when it break the support, this 120 will now turn to be the resistance. And of course we are back to, so we can like kind of like shift this line. I'm not going to draw it again. You can shift it down here. And this 120 would now be like that new resistance level, support turn resistance. So same thing if we do see any of those bearish candlestick bar, shooting star, I think we talk about it many times, right here at the 120 level, that's where we could potentially see selling coming back. So let me just draw it for you. Of course, this is like happening right now. So you can like push down, consolidate up, swing down, and then we see like a shooting star or some bearish candlestick bar right here. It might start to push down again, and where you can take like a short position, all right, to ride it all the way back down. But this is pretty much the range, because we do break like the 90. I think right now we might see some support at about the $90. Let me just draw this green dotted support line. So the trend is pretty much down for now. As I mentioned, right, we're forming lower highs, right? Lower high, you can see this, I mean, over the past like few months, this is the high, this is the high, it went lower, it's a high, the high, all right, and this is another high. So it's like lower highs. All right, so trend is pretty much down. It's heading lower. You want to be careful if you're thinking about buying, because you can get stuck. All right, think about taking short positions to ride the downside. And yeah, so that's what you can do in a downtrend. And the next thing would be the moving averages. Look at this, right? This red line, as I say, this 100 days moving average has crossed down. I think that was like 2021 June. It has crossed down below the blue line, and since then we are pretty much below the blue line, the red below the blue, both lines pointing down. So still in a downtrend, I would say. And this red line, the 100 days moving averages, all right, is still kind of like coincides with this 120, right? 120 new lower resistance level. So anything below the 120, I would say we are pretty much in downtrend. If you're to get back up, well, good. Then in the short term, we might see a bit of a rebound. You have a stop loss, all right? In case you're shorting near that 120, you see a bearish candle, you short near there, it's perfectly fine, all right? But you want to have a stop loss if it goes above that 120, all right? 122, 125, 23. Have a stop loss to just buy back to cover back in case it started to push all the way up. Does it make sense? All right, but right now in a downtrend, potentially we might actually hit lower, all right, especially near this zone right here, the sell zone. Anything from like 1 15 to 120, and of course if we do still see those bearish candle, even better. All right, that's where there's a very high chance of it pushing lower and maybe even breaking this $90. So over the past like 2-3 months, there is a couple of support around $90. You can see we rebounded, so it might actually kind of like hit to 90 and rebound, but it might near 120 and then it might come back down again. So we break like the 120 level, the $90 support level right here. That's where we could potentially hit even lower, right? From like 60 to 70, that could actually be like the next downside. And of course we might shift this down back again. Look at this right here. We might have like a new lower, all right, selling zone, whereby selling can actually come back again. And same thing, we want to look at where we can take those short positions when we see those bearish candlestick bars, right? So let me just go ahead to put it back here and in this chart. All right, so this is like a kind of like example. Just give you guys, I think we'll kind of like dive deep into it, all right, to see, focus a bit more on the trend, a bit on the zones, a bit on those bearish candlestick bars. In fact, we've spotted quite a few of those bearish candlestick bars. So I hope you have a clearer picture of what to do in a bear market, especially in the downtrend, and where are the areas that you want to spot those bearish candlestick bars and bearish candlestick patterns. Alright guys, so there we have it. I hope you enjoyed this video, alright, and we have pretty much covered like a bear market, what to look out for in a bear market, a downtrend, and of course we look at the bearish candlestick bars and bearish candlestick patterns that you want to be careful if you actually spot it at certain areas near the resistance level, especially in a downtrend, right? So we have looked at these real life case studies, we have dived deep into it in terms of the support, the resistance, and a bit of a trend as well, and of course we dive into where we can actually find those bearish candlestick patterns. Alright, so I hope you like this video, guys. If you do like this video, I would appreciate if you can hit the subscribe button. That will really help out the YouTube channel, and of course give me a like as well. I hope you have found some value in this video. Give me a like, smash the subscribe button so that you will not miss out on any videos like this that we share on YouTube, right? So thank you so much for watching. Joey here. I look forward to see you next video. Let me know in the comments below, right, what is your biggest takeaway by using bearish candlestick bars, especially in a bear market, right? Let me know what's your biggest takeaway. I look forward to look at the comments. I'll reply to each and every one of you. Thank you so much. I'll see you soon.